Good morning, everyone. I welcome you all on behalf of the Madras Tax Bar. The topic for today's session is inbound manufacture, and the speakers for the today's session are Advocate Mr. G.Natarajan and M. Karthikeyan. Before handing over the session to Natarajan sir and Karthikeyan sir, I would like to make a couple of announcements to all the participants. We follow a standard operating procedures in our webinars that all the participants will be on mute. At the end of the session, after the speakers complete their presentation, if any participant has any questions, they can raise their hands and I unmute the respective participants and they can ask the questions. If they have any network issues, they can put the questions in chat box. I will read it and the speakers will answer it. I'm handing over the session to Natarajan sir and Karthikeyan sir. Over to you, sirs.
Thank you, Nitin. Once again, very good morning to all of you on a Sunday morning. So this topic for today's discussion, even though it is not new, it is there in the statute book for quite some time. Many people have not noticed it for various reasons. But of late, starting from, we can say that the last year, September 2019, this has picked up a momentum because the government has simplified the lot of procedures applicable in this regard. So ever since the government has been promoting this particular scheme, which will be very, very helpful, especially for the MSME sector and for larger sector also. So you could have seen day before yesterday, there was a webinar conducted by the Ministry of Finance, where the Minister of Finance, Minister of State for Finance and Chairman CBEC, they all participated and spoke about this particular scheme. This scheme is yet to pick up. In fact, when I spoke to some of the commissioners in Chennai, whether they will be able to give a presentation on this topic from the departmental perspective, either today or on a different date, they said that as far as Chennai is concerned, the scheme is yet to pick up and they have not received much of the applications. And if there are any practical difficulties, you just write to us and after that we will have a session. This is what the feedback I got from the Customs Department. So, as I said, even though this particular scheme is not new, already there, it has come in a modified version. Before I go into my PowerPoint presentation, may I request my colleague Karthik. Karthik, can you please say something about what is this warehousing all about? What is this warehousing and what are the different types of warehousing available? And what is it warehousing all about? As a beginner, I'm asking you, can you please explain?
Yeah, warehousing is an option for making a clearance. Generally, whenever there is an import, you are entitled to clear it for home consumption or file a warehousing bill of entry, get the goods cleared without payment of any duty, move the goods to a bonded warehouse premises. It's a customs bonded warehouse premises where non-duty paid goods are stored. You can keep it for some prescribed time as provided for in the Customs Act without payment of duty. And if it crosses that time, you may be liable to pay interest. You have some prescribed time for holding the goods within the warehouse hold. Earlier, before, there was some procedural issues. Even for getting a warehousing license, the warehouse area have to be declared as a warehousing station. Then a customs bonded warehouse license will be issued. Further, if you want to go in for a manufacturing operations within that warehouse, then you have to get a inbound manufacturing operation permission separately. All these procedures were there. Whoever were operating in a larger way, import and export were happening, only they were holding such licenses. Then in 2016, again, the procedures were relaxed. Now there is no requirement of getting any warehousing station declared. Straight away, Principal Commissioner can give warehousing licenses. There are three types of warehousing. One is public bonded warehouse. A common person will create a warehouse where any importer can store his goods without payment of duty. The second one is a private bonded warehouse where an individual company can, for them own use, create a bonded warehouse, import materials, keep it there and clear it as and when required on payment of duty. The third one is a special bonded warehouse. Let us not get into that.
So, what I understand.
Yeah,
tell me.
Basically, this is meant for importing and trading or for captive consumptions. In some occasions, even manufacturing and other operations were allowed to be carried out within the bonded warehouse itself. And there are certain regulations as to how the goods should be handled, accounted for and cleared from such bonded warehouse.
Okay. So as I understand, if I can summarize, there is a concept of public bonded warehouse set up under section 57, like this Central Warehousing Corporation, Concor and all, they have their warehouse outside the port premises or near the port premises. We can clear the goods by filing a warehouse bill of entry. Without payment of customs duty, bring it to that particular warehouse. And from that warehouse, whenever we want, we can clear the goods by filing an ex-bond bill of entry and paying the customs duties. These are public bonded warehouses.
Exactly.
And private bonded warehouses, an individual, they may also apply for a warehouse license for their own premises, for their own godown. But the procedures in this regard were earlier very little complicated because the entire area has to be declared as a warehousing station by the customs department, and there are a lot of regulations and all that. So under these two provisions, that is 57 and 58, many rules were framed, like warehouse custody and handling of goods regulations, warehouse to goods removal regulations and all. But one unique feature of all these schemes is posting of a bond officer in all these, because it will be under the control of the customs officer. Each and every movement of the goods, it will be subject to a kind of a physical control. An officer or everything, we have to take his permission, whether it is removal or removal for home consumption, removal to another warehouse, everything will be absolutely monitored by the customs bond officer. So this was the warehousing scheme which we had prior to the new scheme, whatever. That is what I could understand from whatever Karthik has said. Now, we should also note what is section 65 of the Customs Act. The 65 of the Customs Act, apart from section 57, which deals with public bonded warehouse, and section 58, private bonded warehouse, we should also know what is this section 65. So once it is a warehouse, we store the goods, and from there we can clear the goods as such. This is the normal understanding. So whether it is a public bonded warehouse or a private bonded warehouse, we can bring the imported goods to that warehouse without payment of customs duties, and subsequently we can clear it as it is. But when people wanted to do some operations in the warehouse itself, some processing, it may amount to manufacture or it may not amount to manufacture. That's a different thing. Suppose if some people want to undertake certain processes inside the warehouse on the imported goods before their clearance, before their subsequent clearance, that is governed by section 65. 65 deals with that. We have to take the permission of the jurisdictional commissioner of customs. We have to take a permission from that particular commissioner. And after undertaking the process, the resultant goods, either it can be exported or it can be cleared for domestic consumption. And the section 65 also says, whenever we do such a processing, there may be some waste also. So how the waste has to be dealt with, that is also covered under section 65. It says, if the exported good, if the resultant goods, that is after carrying out the process in the warehouse, if the resultant goods are exported, then the import duties on the inputs contained in waste and refuse will be remitted. That is, we need not pay. If the resultant product is exported, there is no need to pay any duty on the parent material to the extent of waste and scrap. This is as far as the export is concerned. If the resultant goods are cleared for home consumption, suppose let us say, maybe I will elaborate this when we come to the scheme. So we'll just note, for if the resultant products are exported, the import duty on the waste and scrap parent material need not be paid. If the resultant product is cleared for domestic consumption, then if there is any waste, the inputs contained in that waste, the import duty on the inputs contained in the waste is liable to be paid. This is what section 65 says from the beginning. There is no recent amendment on these provisions consequent to the recent changes and all. This provisions remains as it is. Now, if we move forward, this new rule has been introduced from last year, that is 2019. This is an amalgamation of section 58, that is the private bonded warehouses, section 65, which permits carrying out certain operations in the warehousing premises, and put some doses of ease of doing business, make in India, Atma Abhiman, the Bharat scheme, which has now been introduced for self-reliant India. So all these initiatives have been put into this particular section 58 and section 65, and the result is this particular rule, that is manufacturing or other operations warehousing regulations. That is the whole name of that, manufacturing or other operations warehouse in a warehouse regulations 2019. So it is an amalgamation of section 58, section 65, and lot of simplification measures have gone into that. And finally, we have got this particular rule. Now, who is eligible to apply under this particular regulations? Who can apply for a permission under these new regulations? Suppose somebody is already having a private bonded warehouse license under section 58. I have already a private bonded warehouse license. Now I am eligible to apply under these regulations also. Secondly, I don't have a private bonded warehouse and all, but I still want to claim the benefit. Yes, you are also eligible. Even though you don't have a private bonded warehouse license already, now under the single application, we can make an application for a private bonded warehouse as well as for carrying out manufacturing operations under section 65. So both permissions can be obtained simultaneously. And again, any premises, your own factory premises, wherever you are already carrying on the business operations, or if you want to have a new premises for this particular purpose, no problem. You can obtain this license for a new premises also. So whatever be the premises, it need not be in any customs area, no restrictions, existing premises also we can apply. If it is a new premises, we have to add it as an additional place of business under our GST registration if it is a new premises. If it is already a premises registered under GST law, no problem. We can simultaneously apply for a permission under section 58 as well as under section 65. Please note, section 58 is mere private bonded warehouse where we can store and subsequently clear the goods. Section 65 is a permission to carry out certain operations inside the warehouse premises. It may be a manufacturing operation or some minor operation. So both traders are also eligible. So even though I am a trader, I am importing and I want to get a license under this particular scheme, I can very well do even without carrying out any operations on the goods. I can clear the goods locally. And the last very important point is I need not be an exporter. I may be fully clearing only in domestic market. Either I may be a trader or I am a manufacturer, but I am importing my raw materials and capital goods. Still, I am eligible to apply under this scheme. There is no requirement that I should be an exporter. I can be a 100% DTA clearing person. Even then, I am eligible. This is a unique feature of this particular scheme. Now, if you see what are all the benefits available under the scheme, lot of benefits are available under the scheme, which means I can import the goods which are my raw material. I may be a trader or I may be a manufacturer. So I can import all my requirements, that is inputs or the goods whichever I want to trade. That is also technically treated as an input only. So I can import the inputs. I can bring them to my warehouse for which I have got the license. Under these new provisions, I have got a license for my particular warehouse, my premises. I can bring the goods to that particular premises without paying any customs duties. Basic customs duty, IGST, or whatever cess is applicable. Without payment of any of the customs duty, I can bring the goods to that particular warehouse. I can store them in that particular warehouse. And subsequently, I may be exporting the goods as such. I may import from one country and export to another country. That is possible. Or after carrying out certain operations, whether manufacturing or any other process, I may export the resultant product. So either I can do export as such, or after processing, I may do export. If that is the case, I don't have to pay any customs duties on my imports at all. So if my resultant product or the imported goods are subsequently exported after some time, the whatever customs duties I am liable to pay at the time of import of these goods, I don't have to pay any duty. I have to file a shipping bill. I have to prepare a GST invoice, export invoice, and I can export the goods. So here, Karthik, may I call upon you to kindly explain how this goods will be correlated, because I will be continuously importing my goods and I will be continuously exporting my goods. So the goods imported under a particular bill of entry, when they are exported by filing a shipping bill, so how that correlation will be ensured? Can you please elaborate on that?
Yeah, there is a separate form provided for electronic stock maintenance, where you have to account for all your imports on either domestic clearance or exports. And your inputs will be accounted for in FIFO basis, first in, first out basis.
Oh, like that, the bill of entry to shipping bill, the goods have to be correlated. Once the imported goods are exported or the imported goods are processed or further manufactured and the resultant products are completely exported, there is no need to pay any duty of customs for the imported goods. Whatever customs duties are payable at the time of import, that need not be paid at all if we are exporting. And another benefit of the scheme is capital goods can also be imported. Suppose I'm a manufacturer, I want a machinery to do the manufacturing process. I can import the capital goods also under this scheme. I need not pay any customs duties on the import of capital goods. Take it to the warehousing premises, use it in my processing and use it in my manufacturing activity. And when that customs duty on the capital goods is payable, only when that capital goods are removed outside. I may be using the capital goods for say 5 years or 6 years. After 5 years or 6 years, when I dispose of the capital goods, I may either re-export or clear it locally. If I am re-exporting the capital goods, again, I don't have to pay any import duty on the imported capital goods. If I am disposing it of the capital goods in local market, then at that time only, maybe after 5 years or after 6 years or after 10 years, whatever it is, at that time only, I am liable to pay the import customs duties on the capital goods. So the payment of customs duty is deferred for a long period. So the import on capital goods, I'm not liable to pay any duty. Again, I'm saying this is applicable even for a person who is not at all exporting. I am manufacturing 100%, I'm selling locally, but I need raw materials imported. I need capital goods to be imported. I can operate under this scheme. Import the inputs without payment of customs duty. Import the capital goods also without payment of customs duty. Capital goods, I can use it. No restriction on time period. 5 years, 10 years, no problem. I can use it. But finally, I may be clearing the capital goods. It may become even scrap or obsolete. But whatever is the original duty I am supposed to pay. We should not say that I will pay duty on the depreciated value or the book value. No, that is not permitted. Because at the time of import, we have not paid any duty on the imported capital goods. Whatever duty was foregone at that point of time, that will be liable to be paid whenever the capital goods are cleared outside. And no interest for any of this intervening period. So we call it as a warehousing period. So long as the goods are remaining in the warehouse, permitted warehousing period. What is the permitted warehousing period? We will come to that. So long as the goods are there within that warehouse for the permitted period, there is no interest liability on the customs duty. So this gives a lot of cash flow problems can be solved. So the payment of customs duty is postponed to a future date. It is deferred to a longer date and people can get that cash flow benefit. So the cash flow benefit is going to be one of the major, otherwise, even before, at the time of filing the bill of entry and clearing the raw material input, we have to pay all the customs duties and bring it. Now, payment of customs duties at the time of import is not required. We can bring it to our warehousing premises and keep it. And how long we can keep it, I will come to that. We will be discussing with the warehousing period also. And the next benefit under the scheme is, we have to appoint our own employee as a bond officer. There is no customs control in our premises. There will be no customs control that merchant overtime charges payable to the customs officer, nothing of that sort. Our own executive who has got knowledge on warehousing and customs provisions, they have to be appointed as a bond officer. He can be a bond officer, but I don't think that he can also wear the customs uniform. That may not be permitted. So our own executive, our own employee, he will be designated as the bond officer, and all transactions will be undertaken by him in his capacity as a bond. This is self-control. There is no customs direct control, but audit will be there, periodical audit, periodical verification. If there is any information, the customs department will come and verify. That's a different issue. But day-to-day operations are not under the physical control of the customs department. We should have our own bond officer has to be nominated. Now, coming to this waste and refuse. During the manufacturing process, if any goods are, say for example, we are importing 100 kg of a raw material. Going by the input-output ratio, we will get the final product of 90 kg and 10 kg is the waste, which is the industry standard as per the CION norms. 10% is going to be the waste. This waste can be cleared locally, or it may be destroyed. If there is no use for it, it will be destroyed. Or if we can clear it as a waste and scrap in the local market, it can be cleared in the local market. So whenever the waste is sold in the local market, appropriate GST has to be paid. There is no doubt on that. So waste and scrap, if cleared in a DTA as local sale, appropriate GST has to be paid on the sale price. But now we will take 100 kg imported, 90 kg is the final product, 10 kg has become waste. The waste and scrap is lying. Out of that 90 kg final product, 50%, 45 kg I am exporting and 45 kg I am clearing locally. So please note the example, 100 kg import, final product 90 kg, 10 kg waste and scrap. It is lying. Out of the 90 kg output, 45 kg exported back and 45 kg cleared locally. Now, what to do with this 10 kg scrap? We can destroy. If we are destroying it, we have to treat the waste pertaining to export separately and the waste pertaining to the domestic clearance separately. In our example, 45 kg is exported. So what is the corresponding waste in respect of the export? 5 kg. And 45 kg is sold domestically and 5 kg waste is attributable for the domestic clearances. So as far as the waste attributable to export, 45 kg export, corresponding waste 5 kg. If we destroy that 5 kg, we don't have to pay any import duty. We have not paid any import duty for the 100 kg raw material. Now, out of the 100 kg raw material, we have manufactured 90 and exporting 45. For manufacturing 45 kg of export product, we used 50 kg raw material. So for the entire 50 kg, we need not pay any customs duty. The customs duty payable on import of the raw material. I am referring to the parent duty. We will call it as parent duty. So as far as the export of 45 kg is concerned, I don't have to pay import duty, parent duty, both in respect of 45 kg exported as well as the 5 kg waste attributable for that particular export, provided either the waste should be destroyed or if I clear the waste locally, then what section 65 says is, to the extent of 5%, it will be deemed you have imported the waste as such. My parent raw material will have high value, but to that extent of 5% waste attributable to the exported commodity, it will be deemed that I have imported 5 kg waste. So I have to classify it as waste and I have to arrive at the value, because waste value definitely it will be less. And whatever is the customs duty applicable for that waste, that alone has to be paid. I don't have to pay parent duty for the waste attributable to exported final product. I hope I'm making it very clear. Now, coming to the remaining 5 kg, which is attributable to the domestic clearances, I have to pay the parent duty. Treating it as a parent raw material, whatever the customs, so I have to pay customs duty for the entire 50 kg. In my example, where 100 kg is imported, 90 kg final product, 45 sold domestically, for 50 kg import, I have to pay customs duty for the domestic. For the export clearance, for 45 kg raw material, I don't have to pay any parent duty. For the remaining 5 kg waste and scrap, if I destroy, I don't have to pay anything. If I clear the waste and scrap locally, then it will be as if I have imported 5 kg scrap. So what is the classification for that particular scrap? What is the value? What is the rate of customs duty? On that basis, I have to pay. Definitely that burden will be less. This is the benefit for export is concerned. Karthik, am I clear? Whatever I have told is correct, no? You want to add anything on this waste or anything?
Nothing. You can go ahead. Clear.
Okay. Now, what are the procedures? We have to file an application in Annexure A. There is a circular issue. I'll give the circular number also. So in form Annexure A, we have to make an application to a customs commissioner, jurisdictional customs commissioner. If you are already having a 58 licensed warehouse, we can apply only for this scheme. If you don't have a 58 license, it will be a simultaneous application, same form, Annexure A combined form. And the circular also prescribes detailed records to be maintained. What are all the each bill of entry, how much was cleared, and what manufacturing operation, when they were cleared subsequently. All stock records have to be computerized and in Form Annexure B, the records have to be maintained. So all movement of the materials, it has to be recorded in this particular register. Because it is self-control, it becomes more important. Proper records have to be maintained in Form Annexure B. And we have to execute a bond in Form Annexure C. The bond will be for, we have to estimate, maybe in a year, how much raw material and how much capital goods we will be importing. How much will be the customs duty element on that? So we have to estimate, and 3 times the duty involved. 3 times the duty involved, we have to execute a bond in Annexure C. Normally, security will also be insisted. There are a lot of circulars. Some people can get a waiver of security and some bank guarantee has to be given. And in some places, they are insisting upon a solvency certificate from a bank. So these are all the requirements along with the bond. Along with the bond format is also prescribed in the same circular, Annexure C. If the resultant goods are exported, shipping bill should be prepared, a GST export invoice should be prepared, and no need to pay customs duty on the imported goods. As I said already, whenever the imported goods are exported, re-exported as such, or after conversion, then the parent duty, that is the import duty on the raw material, need not be paid. And if the resultant goods are cleared for domestic consumption, I'm manufacturing or I'm doing trading also. The imported goods I'm clearing for domestic consumption, or after converting them, after doing some manufacturing operations, I'm clearing the goods for domestic consumption. At that point of time, GST invoice has to be prepared. Whatever is the GST on the local supply, that has to be paid. At that time, we have to file an ex-bond bill of entry. So, ex-bond bill of entry is payable only at the time of subsequent clearance of the imported goods. It may be after 1 month, it may be after 6 months, or it may be even after 2 years. But till the time, payment of import customs duty is postponed. So payment of import duties is postponed till the goods are subsequently cleared for domestic consumption, either as such for trading or after being converted as a final product. At that time only, we have to file an ex-bond bill of entry, and whatever customs duty is payable at the time of import, that has to be paid at that particular point of time. 1 minute. 1 minute. Yeah, at the time of supply, at that time. So we get an indefinite warehousing period. So till such time, there is no liability to pay. Definitely, this is going to be a great financial benefit for all the persons who are relying on imported raw material. Anyway, one day we have to pay the duty, no doubt about it. But that payment can be postponed, because subsequently when you manufacture and sell, at that point only we will be able to realize our sale price. Till that time, we don't have to upfront pay the customs duties. That is the benefit under this scheme. And to continue, apart from the imported raw materials, we may require a lot of other materials also. Local, no restriction. We can buy any raw materials locally, both exempted raw material, GST applicable raw material, anything can be purchased. It can be brought into the warehousing premises. There is no restriction on that, any other goods. You may also ask, there are certain inputs which are exempted. The customs duty is exempted on certain goods. They are not covered under the scheme. Even exempted inputs can be imported. Domestic inputs can also be purchased. All the goods can be brought into the premises. Manufacturing can be carried on, and subsequently it can be cleared. There are no restrictions on that. Imported goods can be cleared for domestic consumption, that is trading also permitted. Goods otherwise exempted from customs, that also can be. And prior permission of a proper officer. See, under the present scheme, that proper officer plays a very important role. For every removal, you have to seek his prior permission, whether it is a re-export or bringing it to the warehouse or removal from one warehouse to another warehouse for carrying out any job work or anything. All these things are under the physical control of the bond officer or proper officer. Now that is not required. All the movements we have to record properly in our books of accounts, which are maintained electronically, and the officer should be kept informed. There is no prior permission. So this is another major benefit under this particular scheme. And we should also declare the input-output norms. So we have the CION norms. So because we'll be importing a lot of raw material, so it has to be correlated with the final product. See, I may be importing, let us say, 5 raw material, A, B, C, D, E. Putting them together I manufacture a final product called X. So whenever I manufacture whenever I manufacture and clear 1 unit of X, how much units of A, B, C, D and E has gone into that? So that has to be verified. So this will be based on the input-output norms. So if input-output norms are available for that particular commodity under the FTPCN norms, the same thing can be applied. Otherwise, we have to furnish the input-output norms to the department. And once we obtain a permission under this scheme, there is no question of any renewal and all. It will be permanent unless it is cancelled by the department for any violation or we ourselves voluntarily surrender. So this is another requirement. And as I said, we have to appoint a warehouse keeper. He'll be our own employee, our own executive. He'll be appointed as a warehouse keeper. And there should be a proper board. This is a custom bonded warehouse. Like that, a proper board should be there. And all the store's records, the store's purchase, manufacture, clearance, all the records have to be maintained electronically. And proper security measures. The building should be properly secured. And again, coming to the building, there is no requirement that it should be a closed building. It can even be an open area, depending upon the product. Certain products, like if you take a huge iron and steel sheets and all, open yard it will be lying, and cutting slitting will be done in open yard. No restriction. It need not be an enclosed premises. The only thing is proper safety measures. Access of employees, removal of goods, for everything, proper security measures should be in place. The customs department, when you apply for the permission, they may even come for a physical verification and satisfy that proper security provisions are available in this particular regard. Now, whenever the goods are transported from the port of import to this warehouse, we have imported in seaport or airport, and our warehouse under this particular regulation, let us say that is somewhere near Gumidipundi or somewhere. So the movement of the goods from the customs port to that warehouse, that is one movement. After receiving the goods in the warehouse, we may have to clear the goods to any other warehouse for carrying out certain operations. Karthik, can I call upon you? Can I clear the goods to a job worker who is not a warehouse? He is an ordinary person. He is an ordinary person doing job work for me. Are there any restrictions to clear the goods to a job worker's premises?
There is no provision allowing such transaction at all.
No. To borrow the famous maxim, what is not prohibited is always permitted. So in the absence of any restriction in that, so we cannot say, in fact, in one of the circular also, they have dealt with about the job work. We can clear the goods to job workers' premises. In the absence of any restriction, maybe some more clarity may come on that. But as of now, it stands today, there are no restrictions. We can clear it. Only thing is that movement has to be entered in the Form B register properly. And we have to keep the bond officer informed. That records have to be maintained. And all these movement, after that, we may clear it for export. We may clear it for export to the port of premises. All these movement will be under an one-time secured lock. One-time secured lock. We have that physical sealing of that lock. Given some serial number will be given by the department. That lock has to be affixed. That is the one requirement which has to be followed. So whenever the goods are received from the port of import, for the first time, from the port of import, I am receiving the goods in the warehouse. Then I have to check whether the OTL is proper. If it is tampered, I should not do anything. Immediately I have to inform the customs officer. They will come and verify. So first we have to check whether that OTL is proper. Similarly, export sealing, whatever is the procedure applicable for export sealing, either self-sealing or departmental sealing, all those provisions have to be followed. And once the goods are received in the warehouse from the port of import, we have to endorse in the bill of entry that we have received the goods, and transport document we have to endorse, and we have to give an intimation to the proper officer that these goods covered under this particular export bill of warehouse bill of entry have been received in my premises and accounted in my books of accounts. So we have to keep him informed. Now, coming to the most important part of it, how long we can keep the goods in the warehouse without payment of customs duties? As I have already mentioned, for capital goods, till the capital goods themselves are cleared outside the warehouse. So long as the capital goods are inside our premises, there is no need to pay the customs duty on the imported capital goods. only at the time of their final clearance from the warehouse, applicable customs duty, which was original price. We have to adopt the original value and pay the customs duty. Coming to other goods, that is inputs, till their consumption or clearance from the warehouse. So this has created little doubt. What is this consumption means? Once I use it in the manufacturing, is it consumption? They have clarified it in the circular. Only at the time of subsequent clearance of the manufactured goods. I import the goods today. I keep it for 1 month. After 1 month, I use it in the manufacturing process. Then the final product is manufactured. That final product is lying with me for another 5 months. I don't have to pay any customs duty till then. And subsequently, when I clear the final product after 6 months or 1 year or whatever it is, at that time only, I have to pay the customs duty on the imported goods. The parent duty I have to pay. This is for the inputs. Suppose if it is for trading purpose, I'm not a manufacturer, I am importing for trading purposes. Then my warehousing period is 1 year. But interest-free period is only for 90 days. For trading purposes, the warehousing period is 1 year. I can keep the goods up to 1 year. But interest will be payable after 90 days. Karthik, is that correct? For trading?
No, in general, that is section 61(1), A, B, C, there are 3 classes. Class A and B deals with goods imported by a warehouse which has got inbound manufacturing permission. A deals with capital goods, B deals with other goods.
Yes.
In both these cases, as we already clarified, the warehousing period is up to clearances. C deals with a warehouse which deals only with trading activity which does not have an inbound manufacturing permission at all. That is what is trading warehouse. But there, the limitation is 1 year and interest will be payable after 90 days. But in your scheme, you have taken an inbound manufacturing permission. You are also entitled to trade. Even for those traded goods, the warehousing period will be clearance.
Okay. I got it. So to elaborate further, if I am a pure trader, I will get the license only under section 58. I don't require a license under section 65 because I'm not going to do any process on the goods. So I'm not covered under this particular scheme. So if I'm a pure trader of imported goods, I can retain the goods in the warehouse up to 1 year, but I will be liable to pay interest for delayed payment of customs duty after the expiry of 90 days. This is for pure trading importer. If I am a manufacturer, I also do trading, and when I am covered under both section 58 as well as section 65. Once I have got a license under section 58 as well as section 65, then the general warehousing period will apply till the time I sell the imported goods. It may be after 6 months or after 1 year or even beyond 1 year also. Till such time, I can keep the goods without payment of customs duties and without payment of any interest. Yes. Now, bill of entry shall be filed and customs duty shall be paid for the warehoused inputs and capital import, no interest. Any further delay, suppose if you don't pay the customs duty at that point of time, I am manufacturing and clearing the final product today. Today I have to pay customs duties also on the import. If there is any delay, for the subsequent delay, appropriate interest will be payable. But till such time, there will be no interest on this. Now, what are all the statutory provisions we have to look upon? So whatever we have discussed so far, all these are contained under Chapter 9 of the Customs Act, Section 57 to Section 73, Chapter 9. And the new rules, that is Manufacture and Other Operations in Warehouse Regulations 2019, that was published under Notification 69 of 2019 on 1/10/2019. That rule regulation is very important. And there is a circular issued by the CBIC, circular number 34 of 2019, which clarifies a lot of aspects on that. And the board has also issued a frequently asked questions on this particular aspect. So these are all the statutory materials which are available. So coming to summarize, this particular scheme allows a person to import both inputs as well as capital goods and bring it to their own premises and use it and subsequently clear either as a manufactured product or as such. Whenever the imported goods are subsequently exported, there is no need to pay customs duty on the imported goods. As far as capital goods are concerned, capital goods can be imported without payment of customs duties, kept in our premises. So long as they are within our premises, the customs duty on capital goods need not be paid. Only when the capital goods are as such removed, then the customs duty becomes payable. This scheme is applicable for all the persons. He need not be an exporter. He may be doing only domestic clearances, but he is having imported inputs and imported capital goods. Still, this particular scheme is eligible. The major benefit of this particular scheme is the deferment of the customs duties, which will give a greater cash flow. And now, even when Mr. Rajit Kumar, Chairman CBIC, attended our members some 10 days back, he was also mentioning about this particular scheme. And as I told, the government is taking this particular scheme and explaining the provisions everywhere. Even day before yesterday, there was a meeting by CBIC chairman and the Minister of State for Finance and all that. So I request all the importers to kindly look into this particular scheme and arrive the benefits of it. Now, people may ask, what is the difference between the old EOU scheme and the inbound manufacturing? It is nothing like old wine in the new bottle. So we also had the EOU scheme, which also had all these benefits, and this is nothing but the old wine in the new bottle. You may say that, but the difference is this. If EOU scheme can be compared to a shadi, and this inbound scheme is like a live-in relationship. See, because under EOU, you have a commitment to export. They are called a 100% export-oriented unit. They are supposed to export 100%. But slowly we have diluted that and DTA was permitted and all those things are there. But their commitment towards export, you can get an EOU license, only you can say that I am going to export. So the export commitment is there. And there is an obligation for fulfillment of a positive NFE. The net to foreign exchange earning should be there. So definitely there should be an export. And in an EOU, trading is not permitted. Trading is not permitted. And similar to shadi, exit is complicated. Once you have to come out of the EOU scheme, it involves a lot of procedures, debonding, all those things are there. But our inbound manufacturing scheme is like a live-in relationship. There is no commitment to export and there is no obligation of any net foreign exchange earning and there is no restriction on trading also. You can carry out trading and exit is very easy. Whenever you want to, you feel that I don't want this particular scheme, you can surrender the license, pay all customs duties which are not paid so far and come out. And whether you believe in the traditional marriage or as a modern day person who want to go for a live-in relationship, that is left to you. And these are all the differences between the existing EOU scheme and inbound manufacturing. So with this, I'm just coming to an end of this presentation as such. Now I have some questions. I'll just stop. I'll stop my screen sharing also. 1 minute. 1 second. Give me 1 second. Karthik, I have a question for you.
Yeah.
At the time of import, both basic customs duties and IGST is payable. IGST is always available to me as a ITC. I can always take ITC. Only that basic customs duty becomes my cost. So do I have an option that I will avail the benefit of the scheme for basic customs duty portion alone? I will not pay basic customs duty, but I will pay IGST and clear the goods and I will take ITC. Is there any such option available?
No, because for warehousing, you will file warehousing bill of entry. There, the duties will not be assessed at all. The entire duties will be provisionally allowed to be cleared without any payment of duties. So there cannot be an assessment of BCD separately and IGST separately.
Okay, so once I opt for it, I have to opt for it. I'll ask another question also. I am under the scheme. I am importing by using the facilities of the scheme. At the same time, for certain inputs, I don't want to avail the benefit of this particular scheme because I may be having some thousands of raw material, especially in the case of an engineering industry. And this monitoring this input-output ratio, how much of the input has gone into the manufacturer, all that may be difficult. Say, for example, I'm a manufacturer of a big automobile vehicle. For the engine, I will avail the benefit because I can correlate it easily. So like that for all the bigger components and one-to-one components, I will avail the benefit of this particular scheme. But there are a lot of minute raw materials where that accounting and the matching and all will be difficult. Those imports, I would like to file the regular bill of entry, pay customs duty and bring it to my premises. Is that permitted or is it prohibited?
But rightly, there is nothing to bar such payment actually.
Yeah.
The scheme allows you to even bring in domestically procured goods also for manufacturing operations.
Yes.
So duty paid import goods also can be brought in. There is no bar as such specifically. But practically, when the benefit itself is only deferment and interest, there is no point in paying those duties upfront at least. If you are not able to satisfy in respect of any products, probably you can keep those in line separately, account for it separately, have some control and discharge duty as and when it is possible.
Okay. And my next question to you would be, there are other export promotion schemes like MEAS, drawback, EPCG. So what is the status of those schemes vis-a-vis this particular scheme? Whether all these things can run concurrently, or are there any restrictions?
No. For the exports made from this unit, Section 65 unit, the facts clearly says if there is no bar for Section 65 to claim any export benefit, they can do so. So, like MES or any other benefit which is not the normal benefit of reimbursement of only input duties, probably you will be entitled to claim it if there is no bar attached to it. If you want to import anything under EPCG scheme, then you will not be filing any warehousing bill of entry at all. You will have to file home consumption bill of entry, get those goods assessed. But whether it is permitted to bring those goods into this bonded warehouse and use it for further manufacturing without the Section 65 bonded warehouse is not clarified anywhere. But one point which gives a clue is that the circular as well as the fact very clearly says an existing unit can be converted into a Section 65 bonded warehouse. If already that existing unit has got an EPCG license where capital goods have been imported, or they have an advance authorization where metals have been imported duty free, at the time of conversion into Section 65, probably they have to account for those goods separately and fulfill those obligations. If that is permitted, probably you can also import under EPCG by filing a separate home consumption bill of entry, but yet bring those goods into this bonded warehouse and use it for further manufacturing.
Okay. To elaborate it further, if suppose somebody is having good export potential, see, under this scheme, it is only a deferment scheme, and whenever you are exporting back, the customs duties will be remitted. But still, if somebody wants to avail the benefit of EPCG, per se there is no prohibition. They can import under EPCG by filing a EPCG bill of entry and clear it, use it, and subsequently discharge the obligation. That is one thing. Second, coming to drawback, as we know, drawback is to offset the duties paid on the inputs and input services. And after GST was introduced, the local tax component has been taken away from the coverage of drawback. Drawback is now only for the customs duties. The local materials, we are eligible to take ITC. Earlier, if Senvan credit is not taken, we will get higher drawback. All those provisions were there. Now, after GST, now for local inputs, there is no drawback benefit, only for imported benefits. When we are importing the inputs without payment of customs duties under the warehousing provisions, so definitely we will not be eligible to claim drawback. So drawback and this particular scheme cannot go together. Earlier, certain special drawback rates were given for Section 65 warehouses because at that time they may procure some local inputs also. But after GST, since drawback is totally away from domestic input and input services, drawback and this warehousing provisions cannot go simultaneously. Other benefits like MEAS or APCG, all those things will be available. Now, there are a lot of chat messages where people have asked a lot of queries. I will try to cover up. I want Raj Uttam. Doubt in slide 6. When goods are imported and are exported as such, then the customs duty benefit is available. Is it not required to do some process? No requirement to do any process, sir. Even though you are exporting as such, importing and exporting as such, still this is permissible. Still this is permissible. There is no need to pay the customs duty. We can operate. Now, another person has asked a question. Trader cannot import under the scheme. There is no add to some operation. There has to be manufacturing operation, even processing or labeling. One person has said a pure trader means if it will be a 58 warehouse and he will also be eligible to import. The only benefit under this particular scheme is that the deferment for a longer period, So what can be done? Certain processes. It need not be a complete manufacturing processes. On the imported goods, if some quality checking is done, some labeling activity is done, that can also be considered as a process. Karthik, do you agree? So
Yes,
even
yes.
a labeling can be treated as a
Any-
processing activity, and we can get covered under this particular scheme. Okay. Another person has asked, does other compliances like BIS, where is it? 1 minute.
Alimuddin.
Yeah. Does other compliances like BIS, etc. Or yes, it is always there. Any quality requirements at the time of import, they have to satisfy the quality conditions, electronic regulations, all those things. There is no dilution on that. What happens if I import refractories which is consumed and not cleared at all? Then what happens to customs duty? See, these are like consumables. We may be importing some consumables also, which will not be subsequently cleared. It will get consumed. But while declaring the input-output norms, so we know for manufacturing this much quantity of output, this much quantity of consumable is required. So based on that, consumables also will get the benefit. What is the basis of monitoring the input-output ratio? The basis is the scheme can be misused also. See, already customs, we know that how smugglings are happening, wrong declarations are happening, and the bill of entry will be filed for one goods and all. Actually, there may be different goods, more quantity. So like that, lot of customs frauds are happening throughout. When this much of facility is given, you don't pay customs duty, you take it to your own premises, and then still there will be fraudulent means can be adopted by certain unscrupulous people. So that is why they are insisting on input-output ratio and all this control. Time bound for the benefits to avail. What happens to customs duty on spares which are used and then I do not clear the same at all after use? What happens? See, spares also like consumable. Consumables are also covered under the scheme. It will get incorporated into the final product. It will get used up, and based on that, we can get the benefit. Please explain the difference between 100% EOU and the new scheme. Somebody has asked. I think I have already covered it, and going by the incentive, whatever I have said about it, I think definitely he'll be going for a inbound manufacturing. While clearing capital goods after 2 or 3 years, do I need to pay customs duty on original import value or depreciated value? Original imported value. No depreciated value. You are only getting the deferment for 2, 3 years or 5 years. After that, when you are clearing the used capital goods on the original value, you are liable to pay the duty. Depreciation not allowed as of now. FAG also clarifies. The time limit for depositing goods under section 61 is not applicable. Karthik, one Mr. Sharath has asked, time limit for depositing in warehouse under section 61 is not applicable. He is asking.
It is applicable.
It's applicable, no?
Okay. It is applicable.
Another person, Suresh Nair has asked, for a warehouse keeper, is there any standard base requirement required? No standard. Any person can apply except there are certain restrictions. An insolvent person who has been convicted of an offense. So like that, there are certain categories. Apart from that, all other persons, they are all entitled. Compliances mandated by participating government agencies such as FSI, DCG, etc. has to be compliant. He has actually answered that question. When goods are cleared for domestic market, should we file a single bill of entry for home consumption or multiple bill of entry for each of the RMU? I think a single bill of entry can be filed.
No,
one final.
For any clearance for home consumption, you have to file a bill of entry, pay your duties, only then the clearance will be permitted. So you cannot club 2-3 clearances together. Maybe if it is happening within the same day, probably you can do it. If you are going to club 2-3 clearances over a week's time, that is not permitted.
Another variant of his question will be, in my clearance of one final product, actually 10 raw materials have gone into it. I don't have to file 10 bill of entry.
No,
in one bill of entry, I can declare all the 10 items and pay the duty. But exactly. On the date of clearance, I have to file the bill of entry for all the raw materials contained in it, yes, and pay the customs duty. Then alone I can clear the resultant final product.
Exactly.
Then how is waste attributed when there is both import and domestic raw material? That is not the problem. See, for example, A is an imported raw material, B is a domestic raw material. Using A and B, I manufacture C. I know the input-output ratio. How much kg of A and how much kg of B is required to manufacture the product C. That I should be in a position to know. I should also be in a position to know that if I am manufacturing 1 unit of C, how much quantity of A will go waste and how much quantity of B will go waste. These are all the internal business requirements which everybody should be knowing. So based on that, what is the waste of imported raw material contained on the goods can very well be calculated. This is purely an accounting and stores record. Absolutely, this regulation doesn't tell anything about it, but based on our internal records and accounting records, it should be possible to be found out. Is there a provision to send our imported items for job work? That's what we have discussed also. Outside the bonded premises, it is permissible. Even the circular is also talking about it, even though they are not specifically saying job work. As of now, it is permitted. We are expecting some clarification on that. Only thing is the movement should be proper. We have to record it in our Form B register and we have to account for it. How much has gone and how much has come back. All these things have to be accounted. So regarding currency conversion rate for calculating duty liability, will they take the prevailing rate or old rate? Karthik, when you clarify this, not only the currency conversion rate and the rate of customs duty. At the time of import, my customs duty rate was different. And today, when I am filing the ex-bond bill of entry, my rate is different. So what is the customs duty rate to be applied? And what is the conversion rate to be applied? Can you clarify?
The scheme says you are liable to pay the original duty. It doesn't go into the specifics of rates and all. So the foreign exchange rate as well as the rate of duty payable should be the original that was assessed.
Okay. And Suresh Nair has said, UOU has a requirement of positive NFE, but MOR does not require the same. There is no, I think he has clarified some of the questions. It's not a question. The warehouse license under section 65 also, one which has been licensed under 58. Warehouse to goods means goods deposited in a warehouse. They can be exported. This is also an answer. I think I have covered what is the rate of BCD payable on clearance of the resultant product when there is a change in the duty rate during import, and that's what has been clarified now. What was the rate originally applicable that has to be paid? That's what Karthikeyan has clarified. Not if you predominantly want to export. Also refer to paragraph 12, so and so operating under 65. Maybe we will take up the other questions now. It may be boring for all the people. People, whoever wants to raise any questions, they can just raise their hands and we can take up those questions now.
Thank you, Natarajan sir and Karthikeyan sir. Sir has also clarified those questions which were put up in chat box. If anyone has any other questions other than those, can kindly raise your hands. Mr. Pradeep Venkadeshan, sir has raised his hand. I'll unmute him.
Mr. Alimuddin is also raising. Sir, you can raise it in the app. No problem. Now we have noted. Mr. Alimuddin, you can call him next. Yes.
Sir, good morning, sir. It was a wonderful session, sir. I just have a few doubts, sir. See, a client is fully into export, sir. So we said that on the duty or waste, as such it is imported, we need to, as it is imported, we need to pay a customs duty. So how do we determine the value of such duty or waste, sir?
Transaction value. At what value you are going to sell it in the market?
So that is the value I need to pay customs duty also.
Exactly.
Perfect, sir. So this warehouse keeper, can it be outsourced, sir?
It's a question to me.
No, it has to be your employee because lot of controls are there. It has to be by you only. It may not be. If you want to outsource it, you can as well go for a private bonded warehouse, public bonded warehouse, which is already there. But once you want to apply under this scheme, you cannot outsource it. You should take up the responsibility yourself.
Perfect, sir. Sir, one more doubt, sir. That circular 34 specifically clarifies that monthly return in Form B is required only for the purpose of non-section 65 purpose. So if you are into manufacture, do we have to file that Form B, sir, on a monthly basis?
I think it has to be done in both the cases.
Because it says that in a case warehouse is used for such purpose, that is non-section 65 purpose.
Let me check. I'm not very sure on that. But to my understanding, the return should be filed for both. Either you clear it as such or for use for manufacturing.
Yeah, we will verify it and come back. We can go to the next person. In the meanwhile, we will verify that.
Yes, thank you.
Mr. Nitin, you can unmute Mr. Alimuddin.
I have unmuted Mr. Alimuddin, sir.
Yeah. 1 minute, sir. Before going to that, the earlier person, as you said, the circular says that monthly return in Form B as prescribed so and so is used for such purposes. Is used for the monthly return in Form B prescribed in case the warehouse is used for such purposes. That is non-65 purpose, not section 65 purposes. If it is 65, is there a requirement? But if you see the columns of those particular form B and all, it applies to both the cases. But coming to that filing, as you said, there is lack of clarity. It has to be clarified. It has to be clarified by the department. Yes, sir, Mr. Alimuddin.
Yeah, see, my question is, see, any item like a quality, PGA clearance or quality like BIS and other things are required only for home consumption. If I am going to import it for warehousing and I am going to export it, only before clearance of for home consumption, they should insist on PGA clearances. So
Exactly.
at the time of warehousing, whether I'll be allowed to clear without PGA clearances?
Yes, yes. At the time of warehouse bill of entry, you will be allowed to clear without those things. Only when it is cleared in domestic, either as such as a resultant product, you have to comply with those laws.
But the system doesn't allow you to clear without PGA compliances at the time of warehousing. When you file a bill, it is automatically forwarded to all the PGAs, and PGAs only after PGA clearance you will be able to warehouse it. That is the procedure currently. There's no provision to bypass that procedure as of now.
It need to be checked, sir.
Maybe we may have to. Maybe they would not have done that required amendments in the scheme. Maybe it has to be represented locally.
Vishwanathan sir has got an answer to it, sir.
Vishwanathan, unmute பண்ணுங்க. Prithvi.
I'll unmute Vishwanathan, sir.
Good going, Karthik, but I am not giving an answer for this. I have 2-3 doubts. You see,
Yes,
what
sir.
happened if you have IGST at the time of import, you
Yes.
manufacture some goods,
Yes.
you are going to sell it in the market.
Yes.
How the import IGST and the sale of IGST will be adjusted?
You are filing a bill of entry for only imported materials.
No, on local sales also I have to pay IGST, no?
No. Though you are supplying a resultant manufactured product domestically, the regulation requires that you have to file a bill of entry for the imported material contained in the resultant product, pay duty on it, then make a supply, which is again on a domestic GST. It doesn't require any BCD component.
I'll elaborate it further, sir. Today, what we are doing? Today, we are importing, filing bill of entry, paying IGST, taking ITC credit. Subsequently, when we sell it locally, we either pay CGST, SGST or IGST, whatever is applicable. This is what is being done today. The only difference will be that payment of customs IGST and raising of GST invoice will be on the same date. So we will not be paying any IGST on the imported goods initially, bring it to the warehouse, keep it for 1 month. After 1 month or 2 months, when we are clearing the final product, first we have to file the bill of entry for the imported goods. Pay basic customs duty, pay IGST, take ITC of it. Then raise a GST invoice for the subsequent supply. If it is an intrastate, CGST, SGST, otherwise IGST. So these two are different things. The only thing is, in current situation, the import IGST will be payable on the date of import, whereas supply GST will be paid later. But under the new scheme, both this will happen on the same day.
No, I have a difference of opinion because when there is an export bill of entry, it is all the customs officer who has to collect the duty and clear the goods. It is his responsibility.
Here also you are going to pay only customs IGST.
Take credit on your own.
Export bill of entry is not filed for the resultant product.
It is for the raw material.
Yes, it is. It is
No,
for
no,
the resultant.
No, sir. Very clearly it is clarified that
the scheme itself allows customs duty benefit for the imported goods, and you don't have to pay import duty on the customs duty on the imported goods. Bring it to your premises, use it, manufacture. After, when you clear the manufactured product, at that time you pay imported duties on the raw materials which have gone into the manufacture of the final product. It is not customs duty on the final product. No, it is the raw material customs duty.
I'll read the regulation 14 proviso for you, sir. It will make it very clear. It says, provided that a bill of entry for home consumption has been filed in respect of the warehoused goods contained in so much of the resultant goods, and the import duty, interest, fine and penalties payable in, if any, in respect of such goods have been paid. Only then the resultant product will be allowed to be cleared. For resultant product, there is no requirement of filing BE, and you will pay only GST.
No, but the bill of entry for home consumption will be filed in the name of whom? For sale to so on the party.
On the
I
shelf,
myself
on the
will
shelf,
pay.
on the shelf.
Importer.
Self is not permitted under 59, sir. Kindly check on that, because whenever you make a home consumption, it is always supplied by the warehouse keeper to an industry in India.
We are not,
clearance.
sir, please, we are not supplying the imported goods as such. You are
Correct.
affecting a
That is why
situation.
the problem.
See, if it is a high C sale, I am affecting a high C sale. The buyer himself will go and file the bill of entry and clear the goods. But here, I am importing A, B, C, 3 product. Use it. I clear new product D. Now, as an importer, I have to file bill of entry for A, B, C. When I am clearing the final product D. At the time of clearance of final product D, I have to file bill of entry for ABC and pay customs duty on ABC, and then raise a supply invoice for the final product, which is D. We are not going to file bill of entry for D. Bill of entry is for ABC, which has gone into the manufacture of the final product D. That is the scheme.
Sir, even
Let us talk about it later. Let us not waste time here. But I have a different
Okay.
view.
Next person.
Now I'll unmute Mr. Vishnu Agarwal.
Hello. Sir, is it audible?
yeah,
Hello?
yeah, sir.
Yeah, sir, basically I want to check on the deemed export. When we are doing deemed export, say we are supplying to EOU or STPI. So in that case, there is no requirement of filing shipping bill. So in that case, I mean, how we can save on this import duty? Because for a supply to EOU, if we do, so currently we can take the benefit of duty drawback under a foreign trade policy. So how this scheme can benefit in?
One thing. Basically, this deemed export benefit is applicable only for goods manufactured in India.
Yes.
Secondly, this will not apply for imported goods. Now the question is, where some goods are manufactured under Section 65 bonded warehouse, on clearance of manufactured goods, you will be paying only GST, not import duties. What is required to be paid is only the import duty that is payable on imported material contained in your finished product. That will happen normally. Your subsequent sale to an EOU, probably you can claim your deemed export benefit. There also you have to pay GST upfront. You can claim refund of it.
There are two parts to it, sir. There are two parts to it.
Yeah, okay.
So coming to your deemed export, this is a customs duty deferment scheme. This is not any exemption or anything. It is only deferred. So your subsequent clearance may be export, your subsequent clearance may be a normal DTA clearance, or your subsequent clearance may be a deemed export. But this scheme gives the deferment of customs duty on the imported raw material. So we avail the benefit. We bring it. After bringing it, we manufacture and clear the goods. If that clearance is going to be a deemed export, there is no corresponding exemption for the customs duty payable on the raw material. So at the time you have to file a bill of entry and pay all the customs duty on the imported material. The deferment benefit we have enjoyed. At the time of clearance of the final product as a deemed export, we have to pay customs duty on all the imported inputs contained in that particular clearance. Now, coming to deemed export, what are the benefits available? You will be charging the GST and you will claim refund of it, or the recipient can claim refund of it. So all those options which are currently available, all those things are available. There are two different aspects of it. Karthik, am I correct?
Yeah, one more thing. Under FTP, as he rightly said, for a deemed export, he is entitled to either a deemed export drawback or an advance authorization.
Yeah, right. That's what I am coming to.
Yeah, if you are going to claim deemed export drawback, that will not affect this transaction at all, because you are going to pay BCD and IGST on the imported material content. So you are entitled to claim your deemed export drawback on the supplies made to a deemed export.
So this scheme will actually not benefit me to save custom duty upfront.
No. Even at a deemed export, if you want to save custom duty upfront, instead of going for deemed export drawback, you should have opted for advance authorization for intermediate. Okay. If you get that advance authorization, probably at the time of filing a bill of entry for the import material contained in it, you can use those advance authorization and clear without payment of duty, but this has to be practically seen how it is going to work.
But for if I'm exporting, then I don't need to pay any import duty, right? When
No,
I'm exporting.
If you're physically exporting, there is no requirement of any payment.
Physical export and SCZ supply, both.
Yes.
Prithvi, you can unmute Krishna and he said he will clarify in this regard. I think.
Yes, sir. I'll unmute Krishna. Krishnan sir is on unmute.
To answer Vishwanathan sir, when you bring in local inputs into a warehouse, no GST is payable at all. But you have to file an ex-bond bill of entry and pay the applicable duties. So where is the question of Mr. Vishwanathan is online?
Yeah.
Yes, I'm there.
Yeah, tell me, sir, what was your exact question?
See, the question is when you import and bond it,
Yes.
I manufacture in bond and I clear. Is the customs authority not the authority for levy of IGST also, because it's a customs area, custom bonded warehouse?
No, 1 minute. When you import and file a warehousing bill of entry, no duty is payable. First point is no duty is payable. Your second question
it is assessed for purposes.
It is assessed as a warehousing bill of entry, but no duty is payable, no IGST is payable. Point number one. Point number two, the question that you asked was, if I bring in local inputs for manufacture inside a warehouse.
No. His question was not that. He was only saying that if I am supplying to another person resultant product, whether I should file bill of entry in my own name or I should file a bill of entry on the buyer.
He can do both.
No, once again, in case of trading as such, the present provision allows you to file a bill of entry in the name of buyer. But when you are doing a manufacture and you are clearing resultant product to the supplier, this rule says you are liable to pay import duty only on the warehoused goods contained in the resultant product.
Correct. Karthi,
yeah.
The problem is that the circular is contrary to the act.
That is
what my point.
To the act. So therefore the act will prevail, and as per the act, the bill of entry for ex-bond has to be filed by the person who bonded the goods, and ultimately he will then raise a regular domestic invoice in the name of the seller. Buyer, sorry.
No, if that is done, okay, fine. Vishwanathan sir was under confusion that if I am going to raise
confusion, I was not confused. Don't say that.
Okay, sir. Sorry, sir. He was under the opinion that I am not entitled to file a self bill of entry. That was pending for clarification. Suppose in the existing...
what is home consumption is very important. Home consumption means the person who is buying that goods.
True, sir. No, sir. You are saying that I cannot file a bill of entry in my own name and take ITC. I'll clarify.
One minute. I'll give an example.
I was only saying IGST on import is payable when I sell the goods, imported goods. But here the imported goods is transformed into a final product.
Sir, not a question of selling. When you clear the goods, or you clear it yourself.
Yes, when I supply, I will use the legal term when I supply.
No, when you
sir, 1 minute. 1 minute. See, if I continue with that example, this will be more clear. What I have imported, A, B, C, 3 raw material. I have imported under warehousing. I have not paid any customs duty. I brought it to warehouse. I done manufacture, converted it into D. Now, when I am supplying that D to another person, I think these are all the facts. Now, at the time of supplying D to a person, I have to file a bill of entry for ABC. My buyer is not concerned with the ABC. I will be exposing my import price, everything to him. What he is clearing from my premises only D, which is a local transaction. So I will give an invoice charging GST and he will take 1 minute. I will be giving an invoice for sale of D in favor of my buyer and he will take the goods, he will go. At that time, whatever import customs duties I have not paid on A, B and C, that has to be paid. That is my responsibility. I am the person who has warehoused it. I am the person who has given the bond. I am the person responsible. So at that time, I have to file the bill of entry for ABC and pay the duties and take credit of the IGST in it. This is what I feel.
No. May I clarify?
Yes.
You have filed a warehousing bill of entry. The goods stand in your name, and only you are authorized to clear the goods from the warehouse. No
That's
third
what,
person. No,
that's what I am also saying.
no, let
That's
me
what-
complete. No, you talk. We have now come only up to A, B, C. We have not come to D.
Hmm.
Now, when you come to D,
Hmm.
either you do an in-bond sale to your buyer, and your buyer
393.
files an ex-bond bill of entry. Failing which,
No, that's right.
Export bill of entry for what?
One
For
second,
which
one
item?
second. Krishnan,
for
Krishnan.
A, B, C, D.
No, Krishnan, that is what the rule requires that once you file an ex-bond bill of entry for ABC, it is no more bonded material.
After
How
payment
it
of
is being, how it will be.
Exactly. That is what for clearance of resultant product, the regulation very clearly say you are permitted to clear
Against the act. It is against the act.
Already
Once you
agreed.
have bonded, it is a customs area as per section 7.
Vishnu sir, 1 minute. Karthi, we already agreed. Regulation is not in consonance with the act. It needs clarification.
Yes, that's what.
So, what we are debating is of academic interest.
Yes.
But the fact of the matter is, the law permits in-bond transfer of goods, but not goods bought from outside the warehouse domestically and then transfer of the goods. It only permits transfer of imported goods that are warehoused. So this is where I differ with Natarajan as far as the D component of his answer was concerned.
So my logical answer to it is, as long as ABC is where ex-bond is filed.
Karthi, where does department believe in logic?
Logic is not working, no.
No. That is what the regulations probably has arrived at. They say if you file a ex-bond bill of entry for ABC.
Vijay Kumar is there. He may respond.
In the meanwhile, Karthik, somebody has asked if Sion norm is not available, who has
Sir,
to fix that?
one more question, sir, if you don't mind, please. This rate of tax is determined under section 15. It's not the original rate at which I imported.
No, that I already clarified in the chat box. The rate of duty will be the rate of filing of ex-bond bill of entry, not the rate of duty on which you file the
It's
bond.
only the valuation you can adopt that, not the rate of tax.
Yes.
Karthik, your views on that rate
No.
of duty which has to be applied?
No, as per warehousing provision, yes, he is absolutely correct. Only value is the ex-bond bill of entry value. The rate of exchange and foreign rate of exchange should be only the rate prevailing on the date of clearances. But here the scheme is given and go to full end. Like suppose you import a capital goods, you clear it after 10 years. I don't know whether it will be assessed again after 10 years.
Yes, it will be.
Yes, it has to be. Section 15 is very clear on that.
Will be.
But somewhere it has been clarified that it will be the original duty payable. I'll get
No,
to
they
that.
can clarify, sir, with section 15 in force. How can they clarify that?
Sir, the whole problem is that these clarifications are absolutely contrary to the provisions of the Act.
Exactly. There is
The
some
clarifications have no legal basis and the Act will prevail.
legally probably so, but the intention of the scheme was to allow that. Maybe.
But
No, this is not a new scheme, sir.
See, 1 minute.
Regulation 1966.
Let me summarize like this. See, wherever what has been clarified in this circular or the regulation, if it is going to be of a benefit to you as there is no problem. We are not going to complain about it. But wherever it infringes upon the legal provisions and contrary to the provisions and thereby we are affected, definitely it is prone for challenge. So there is no second thought on that.
Sir, I noticed one board circular now with regard to Mr. Viswanathan sir question, the board circular 34/2019.
Yes,
It clearly says in case of manufactured goods which has to be supplied to domestic tariff area, then the licensee only has to file a bill of entry on the resultant product, the raw materials contained in the resultant product. On the other hand, you will be raising a general GST invoice on your buyer. So
Exactly.
only the licensee has to file the bill of entry. So
Exactly.
board circular 34/2019.
Yeah, that is the whole scheme. The whole scheme has been explained in that circular. Any other questions?
Can I unmute Mr. Santosh? There are a lot of people who have raised their hands.
Sir, good morning. My question is, for when I have to file the bill of entry for home consumption, whether this has to be filed online and assessed from the customs officer from where it was imported, or can this bill of entry be filed manually and assessed with my jurisdictional bond officer?
I think it can be filed online if there is a system for filing. It is normally they are expected to file with their jurisdictional ICD or somebody or any customs authority.
Or is it to the parent port where the materials are imported?
No, not to the parent port. Jurisdiction of the warehouse.
Okay.
Thank you, sir.
Next question is from Mr. Pratik Marlecha.
Okay, once again, Krishna has got something else to say.
Okay, I'll unmute Krishna.
Yeah.
Yes, sir.
On what bus?
The bill of entry will be filed before the jurisdictional bond officer who is in charge of your warehouse.
Exactly. Okay, Nitin, next person.
Yes, sir. I have unmuted Mr. Pratik Marlecha. He can proceed.
Yeah, good afternoon, sir.
Good afternoon.
Sir, my question is that I already have an existing setup where I have purchased my capital goods and all those things under EPCG license and this thing. So can I use this scheme only for buying the raw materials now?
Yeah.
I can use it in my existing. It's not that it has to be a separate manufacturing premises.
No. You can convert your existing premises into a bonded warehouse. You can use it only for future imports.
It's already there.
But I already have a DT, I mean a good setup for DTA also. So that can be used for DTA as well as the exports also.
Yes.
Yes.
Right. So, okay. Thank you, sir.
Yeah.
Okay. Next, I'll unmute Mr. Shankar.
Good afternoon, sir.
Good afternoon.
I have 3 queries. Can we declare a small area in our manufacturing plant and obtain the license for this?
Why small area? Declare the entire premises. There is no question of separate enclosure. All those things are not there. Instead of small area, you can put the entire address and same building as a warehouse. No problem.
Noted, sir. Noted. And what if we import the goods and the timeline is 90 days without any interest? And if we consume it for local production, when should we pay the duty actually?
That's what we have explained also. If you are using it, you are importing raw material, using it in the manufacturing and converting it into the final product. Only when the final product is cleared from your place, at that time only you have to pay customs duty on the raw material till such time.
Okay, sir. But the timeline is limited to 90 days, correct?
No.
That is applicable only when there is a pure customs bonded warehouse under section 58 alone, where you have not taken inbound manufacturing permission.
If you are a manufacturer, you have availed the benefit of the scheme for your raw material, then your customs duty payment on imported raw material is postponed till you clear your final product locally.
Noted, sir. That doesn't have to be an export, correct?
No, if it is export, you don't have to pay at all. If it is an export, you don't have to pay. Only when it is a domestic, you are liable to pay. There is no fixed time limit. It can be 3 months, 6 months, 1 year, whatever.
Okay, sir. And in case of capital goods, let us say I'm importing goods worth of 5 crore CNC machine, and I'm using it for local production for per se 7 years. And during the 7 years, will there be any interest payable, or should I pay the duty only on the original value during scrap?
No interest. 7 years, you can keep it. Finally, when you are clearing that item, capital goods, outside your premises, at that time, on the original value, you have to pay customs duty, no interest.
Noted, sir. What if I re-export that same machinery to any of our plant in other countries?
You don't have to pay the customs duty. That is the customs duty which was not paid on import of that capital goods, that you need not pay and export it.
But the concern is that while re-exporting the goods, I'll be billing them at the depreciated rate. Would that have any revenue impact in India?
No problem. The question is, we are talking about at the time of original import of the capital goods, you have not paid customs duties. At
Yes.
the time of original import, you have not paid customs duties. Used it for 7 years. After 7 years, you are going to export the capital goods either to your own unit or a third party, whoever, at whatever price. That and all is immaterial. Because the imported item is re-exported, the original import duty not paid need not be paid at all.
Okay, sir. Thank you. That would
Next,
be
next I'll unmute Mr. Venkat. Yes.
Yeah, hello.
Yes, sir.
Yeah, I think it is regarding the points that we have been discussing. What I feel is when we you import raw materials, like the examples that Mr. Natarajan gave, A, B, C. When we make the inbound bill of entry, is the value going to be assessed on the duty which is remitted be visible in that bill of entry? So that will be used at any future time, because the whole purpose of the scheme seems to be that this is going to be a postponement of the duty which is assessed today. Let us assume I am paying it after 5 years. So the easiest thing would be to assess it. So see what is the total value payable as of today at whatever applicable rates and the IGST, etc. Be visible in the bill of entry, and even if after 5 years, if I am going to use that for either debonding or for exporting or something, the same thing can be referred. So that solves a whole lot of problems.
Just now, as intervened by Krishnanand also, the rate of duty is the rate of duty applicable at the time of filing the ex-bond bill of entry.
Yes.
So after you may also get at the time, it may be higher, it may be lower, or it may be exempted also. We don't know. But the rate of duty will be that rate which is in force on the date of filing the ex-bond bill of entry. This is the normal regular provisions. But for this particular scheme, what is there in their mind that is not coming out as of now. Going by the legal position, this is correct. Suppose if it is the intention of the government to assess the duty now itself, so that it is only a deferment, there is nothing like that in the provisions as such. If at all they want to make it very clear, they may have to do some amendment and all. But as the legal position stands today, hope Krishnanand will agree, the rate of duty will be the rate of duty which is in force at the time of filing the ex-bond bill of entry as of now. Yes.
Yeah, but if you see, when I am doing my whole costing, assuming today the rate of duty is low, and then suddenly after a particular period of time I find that the rate of duty has gone up, then my calculation could be get disturbed.
Simple thing.
So you are giving me a benefit for postponement, not for taking any hit at the later stage.
Natarajan, may I answer him?
Yeah. Yes, Krishnanand.
Sir, can you please tell me, for the last 15 years, when is the duty increased? It has always gone down, sir. Don't worry about that. Now, to answer the previous question, interest is payable. Earlier, there was a clarification by Karthikeyan and you saying that no interest is payable on capital goods. Please see section 61. Section 61 says, unless it is explicitly, interest is waived by the principal commissioner, interest is payable.
No. Yeah. You have to refer to 61(1)(a).
Yes.
61(1)(a) provides for a warehousing period till clearance.
No, go to the proviso.
Yeah. So go to the proviso.
Provided that the board considers it necessary so to do in the public interest, it may, by order and under circumstances of an exceptional nature to be specified in such order, waive the whole or any part of the interest payable.
No, that is what they have waived under this new scheme. No, that is what they have done now.
That is what they waived under this scheme.
Yes, under this scheme, under these rules.
See, that's the problem. That is why I'm saying there is a contradiction between the regulations, the scheme, the circular, and the act itself. So, which will prevail?
No, Krishnanand. When the act enables the board can waive it. And once the board in exercise of that power comes out with a particular scheme,
please read the preamble to the regulation. And you tell me under what provision is that regulation?
No, that is all correct. I am not saying so. The intention of the board is in creating the scheme is to grant waiver. They have said so.
No, Karthi, my only point is very simple.
Yeah.
People would rather prefer becoming an EOU or go to an SEZ rather than opt for this scheme with so many complications.
I am sorry, Krishnanand, I went to differ. This is a scheme which is
Only for
intended
domestic.
simplification, and more of it government is bent upon giving it. Let us not be pessimistic about it. If there are any issues, yes, there are certain gray areas for which more clarity is required, definitely.
Correct.
But
Yes.
this is intended to be a simple scheme when compared to other schemes. Yes,
Intended
there are,
to be.
even when as I said in
No,
the
no, they
beginning, as I said in the beginning, even when I talked to the Commissioner of Customs, they said there are a lot of practical issues. Whatever you discuss in your meeting, whatever representation you want to give, you give all those points. We will refer. This is in a nascent stage. As you said, there seems to be an anomaly. Definitely, it is there. And we are all surviving on such anomalies. If everything was clear, we don't have our bread and butter. Let it be, and we will represent. We will represent.
No, just for clarification and fun.
Yeah.
And
Sir,
what Commissioner do here?
They will
sir,
forward it. That's all.
sir, can we take two more questions, sir?
Yeah, maybe.
Yeah, okay. Last two more questions. I'll unmute Mr. Rajuttam. So I request the participants to kindly keep their questions to one question alone, so the other person can also ask, as we are short of time. Yes, I have unmuted Mr. Rajuttam.
Thank you. It was a great session. So my only question is on trader warehousing. So when I am importing the goods, I understand there is a deferment of BCD and IGST. I'll stock the goods in the warehouse, and if I am exporting it, then I will get that. Since it is an export, there is no BCD and IGST. But my only doubt here is from the GST side. Will they not treat that export under Schedule 3 under Clause 8A, stating that the goods were never cleared for home consumption? So that will be a non-supply GST, and then automatically it is an exempted. So we have to reverse the GST in the books. That's the only query.
Sir, for that, all items covered under Schedule 3 they are not treated as exempt supply. There is a specific provision. Anything which is covered under Schedule 3 is not, let them, as you validly said, it may not qualify as a zero rated supply. Strictly speaking, as per the definitions, it may not satisfy. It may get covered under the Schedule 3, where the goods are exported from one place to another place without bringing it to the taxable territory. So without going into that, I'm not trying to answer whether that is correct or not. Even assuming that it is covered under Schedule 3, Schedule 3 transactions are protected from ITC reversal. So all except that one or two, all those transactions will get the benefit. So I don't think there will be any problem because of it. What do you say, Karthik?
No, this particular transaction is not covered in Schedule 3 at all.
Absolutely.
His point is, you are not bringing it into the taxable territory. It is as if buying the goods from China and without bringing it, selling it in Japan. It is something like that, which is covered under Schedule 3. That's
I'll read the entry for it. It says
that warehouse is supposed to be a territory outside the territorial borders of India. So therefore, the question of goods coming into India does not arise, and question of applying GST, IGST, CGST, SGST at all does not come.
No, it is not about application of GST. The point is, suppose
that is the question raised.
No. I will explain what he is trying to ask. If I have understood his question correctly, there is one entry in Schedule 3. Schedule 3 of GST Act says the activities mentioned in Schedule 3 are not supplies. They are not supplies. One example I can give: employee to employer. The service provided by employee to employer under Schedule 3, it is not a supply. So like that, there is an entry in Schedule 3 which says, Karthik, can you read it?
Yeah, one second. I'll just take it. Yeah.
Yes. Supply of goods from a place in the non-taxable territory to another place in the non-taxable territory without such goods entering into India. This is a typical case. As I said, I am sitting in India. I order my goods. I will not take the China example. I will take from Indonesia. I order the goods. Without bringing it into India, I have got a buyer in Japan. So directly the goods are transferred from Indonesia to Japan. That particular transaction will not be treated as a supply, even though I am in India. It will not be treated as a supply because it is mentioned in Schedule 3 of the GST Act. Now the question is, can this particular warehouse be considered as in a non-taxable territory? Can it be considered this particular warehouse, even though it is in the interior part of the country, once it is licensed under section 65, it is not part of India, whether I will be hit by that or not? That was the question. I have not answered that question at all. That is an issue which we have to answer. But what I said is, you need not worry. His worry was, if it is treated as a non-supply, whether I will forego all my ITC under Rule 42, Section 16. For that, the answer is, we will not break our head whether that particular warehouse is within taxable territory, outside non-taxable territory. We will go to that later. Even if it is so, Schedule 3 items are not hit by the ITC provisions. I'm just short-circuiting the answer.
Sir, but not all the transactions are getting covered. For
this particular 7, we are worried about 7 only, no?
Yeah, 7, and there is also 8A. There is one more entry as well. So my worry is on that 8A as well also, sir.
No, 8A reads the supply of warehouse goods to any person before clearance for home consumption.
Yes, sir. Yes, sir. So since here I have not cleared those goods for home consumption, in turn I am exporting the goods as it is from that warehouse. So will that?
No,
that's the query, sir.
No.
Yes, sir.
This will apply for an inbound sale. Earlier, what has happened, wherever goods are sold from a bonded warehouse, the department gave 2 different clarification. They said, first you should raise a GST bill on the buyer.
Yes, absolutely, sir.
That should have a GST. If you provide the GST invoice, then they will allow you to file export bill of entry. Even again, there will be an IGST component. There was 2 duplicate levy of IGST on the transaction. To overcome that, they brought this transaction under non-levy case.
Okay, sir. Yeah.
The first transaction, they are saying that it is not under levy. Right.
Okay. So when I'm exporting the goods from there, I can go with the payment or without payment under GST and clear the goods as well, right now, sir?
Exactly.
Thank you, sir. Thanks, sir.
Sir, there are a few other questions, but due to time, paucity of time, I think we won't be able to take them.
Yeah, already it is 12:30.
We have already crossed it. So now I request Vishwanathan sir to give the word of transport. Vishwanathan sir, I'm unmuting you. Yes, sir.
Good afternoon, everybody. A wonderful session on a very important topic, particularly in the time of COVID, where finance is a crunch for the manufacturers. A good move by the government to amend the regulations and permit it without additional cost of posting the customs officers there. The provisions were very well explained by both the DO. Very happy to see Karthikeyan also join his senior and come on the webinar. They very well took you around all the procedures, the law, and whatever food for thought has been given for you to work on that. The Madras Tax Bar profusely thank them for spending the time, as well as the audience who have come here to listen to them. We are sure that all of you would have been benefited by the lecture given by them. And on behalf of MTB, we are also sorry due to paucity of time, certain questions could not be taken. We regret for that. Anyway, my special thanks to Natarajan and Karthikeyan and all of you for being here on a knowledge fiesta, learning more on your side. Thank you very much.
Thank you, sir.
Thank you, Vishwanathan sir. Thank you all thank you both the speakers. Thank you, Krishnanand sir, for enlightening in between, and also Vishwanathan sir and AP Srinivas sir. I thank all the participants who have taken out their time on this Sunday, and we have crossed over 150 participants today. And video recording of this session will be posted in our channel. Name of the channel is Madras Tax Bar Chennai. It's a YouTube channel, and we have uploaded all our videos, all our sessions videos in that, and all can view it from that. I thank everyone.
Thank you. Thank you. Thank you.
Thank you very much.